President Trump's family is launching a smartphone alongside its own mobile service dubbed Trump Mobile. However, will it follow in Trump's Made in America agenda? Yahoo Finance's tech editor Dan Howley joins us now with more. Dan.
Yeah, Josh, this is something that the Trump family went out and announced yesterday, basically showing off the idea of this Trump mobile phone plan. It's basically a virtual mobile network. It's going to ride on what they say is the three major carriers in the U.S. That includes Verizon, AT&T, and T-Mobile. I've reached out to them. I haven't heard back yet from any of the carriers on that. They also announced a new phone that they're calling the T1 phone. This phone is going to be available for $499, a down payment of $100. They say it'll be available in September. The big to-do, though, about this is that it's supposedly made in America, and that would be a big deal because we just don't have very many phone companies that manufacture in America. In fact, one that I spoke to is from Purism. It's the Liberty phone. It's a specialized phone that's all about security and keeping separate from big tech organizations, but that phone sells for $1,999. This phone, $499, sounds like a great deal. However, a number of experts that I've spoken to have kind of thrown cold water on the idea that it will actually be made in America. In fact, some have pointed out that the phone is eerily similar to another phone company, their device, the WingTech Revel 7. It has similar cameras. That phone is a Chinese-made phone. T-Mobile also sells a version of that called the Revel 7 under its Metro brand. That device has a Qualcomm processor. That processor is made in China, so it would take away from that whole made in America thing. And then Eric Trump had actually said during an interview with conservative YouTube personality Benny Johnson that he eventually all the phones can be built in the United States of America. So there's kind of mixed signals going on right here. The one thing that when I spoke to the head of Purism, who develops that Liberty phone, said is it took them 10 years to get to that point, to be able to actually get the phones in the U.S. And one of the issues was, getting a processor that fits there. They say that all the electronics are built within the U.S. The frame for the phone, though, is built in China. So they make sure to point out that the electronics are all U.S. made and developed. So, something like that, it's taken them years to get to that point.
And how much, Dan, did you say he's selling that phone for?
$1,999. So their most recent phone. And so, I think it's one of those things where we're just going to have to wait and see if this phone actually does come out, if it actually is built in the U.S. Right now, you can see what different people are saying online. There's a lot of, show me, rather than, or will this just be vaporware where it's announced and it just never premieres? But they are taking cash for it now as far as those $100 pre-orders. So we're just going to have to see. But all of this, again, is part of the Trump administration's effort, to push that whole Made in America idea. They've said that they're going to place tariffs on Apple or Samsung if they don't start building their phones in the U.S. That's not going to happen. He'll be out of office before they even get facilities up and running. So it's not something that I think anyone can confidently say would actually happen with Apple and Samsung.
I look forward to the Dan Howley review of that phone, though.
Yes,
That's what I'm waiting for. Thank you, Dan. Appreciate it. Well, stocks closing lower amid dwindling hopes for a quick resolution to Israel-Iran hostilities. Yahoo Finance's Josh Schafer joining us now with the trading day takeaways. Josh.
Hey, Josh. So takeaway number one, we've talked a lot over the last couple of weeks about how the market hasn't been paying necessarily as much attention to President Trump and his Truth Social posts. That was not the case today. So the president has been online posting quite a bit about the Iran-Israel conflict. He noted today that he wanted a, quote, unconditional surrender, right, from Iran. That happened right around here, Josh. I'm going to turn my pen on for us so we can circle. Right around here is where the president was posting. You can see that really gave markets the direction for the day, right? Not a massive loss in the stock market today. I mean, S&P 500 falling less than 1%. We've certainly seen worse in the last couple months, but markets nonetheless moving on what the president was saying in terms of the conflict today.
Yeah, here's a question. When you ask the question, and it can sound kind of cold to ask it, Josh, but how much markets, whether they just kind of look through a conflict like this, to the extent that if oil stayed relatively tame, and I think we're around 75, would markets kind of just look through it and get back to focusing on what markets care about, earnings, the economy.
Well, so I think if oil, the strategist take right now, Josh, seems to be that if oil did stay relatively tame, right? And even if we zoom out to a 5-day here, I mean, yes, you've moved higher, but you haven't exactly crashed higher. I think that would be the key.
Right.
And because to your point, you're talking markets normally care about the economy and sort of the trajectory of corporate profit, right? Well, this is your key to what the issue would be, right? If oil went up and inflation went up, that is the concern from this conflict. I mean, I think obviously if the US were to actually enter into this conflict, then maybe different aspects of this conversation sort of start entering, right? But I don't think strategists have really gone down that path to this point. It's just simply been, let's watch oil. Oil will be our market indicator. And right now, the stock market is reacting a little bit, but again, not reacting necessarily a whole lot at this point. Takeaway number 2 today, Josh. So Bank of America had their monthly fund manager survey. They survey investors, ask a lot of questions. One of the ones I like to track is them asking if you expect a soft landing, a hard landing, or no landing for the U.S. economy. So quick definitions on those ones, right? We're talking about the path of the economy sort of in terms of the Federal Reserve's interest rate hiking cycle, right? So soft landing would be inflation falls to 2%, we don't get a recession, right? That's the ideal outcome. And so investors ticked up to 66% of investors seeing a soft landing in this June survey. That was the highest level we've seen for this purple portion going back to last October. So really pre-election. Gives you it's sort of an idea, I think, of how far sentiment has swung in the last 2 months to the positive.
And does that sort of help explain to you, Josh, the market action?
I think it does, because this is sort of the similar chart to recession odds coming down, right? And people feeling better about the economy, people being willing to go more risk on in the markets. One of the things you and I were talking about yesterday, and I was highlighting in my writing today, I mean, CoreWeave up 100% since its IPO. Oklo, an AI sort of nuclear play, that's up over 50%. Quantum stocks are now up over 50% in quantum computing. There's a risk-on vibe underneath the surface of the index in this market. And if everyone wasn't feeling good about the economy like they were in April, this wasn't happening in April, Josh. This is something that we're now getting to because the outlook looks a little bit better.
All right, final bullet point.
Previewing the Fed. So we have Jerome Powell and the Federal Reserve coming out tomorrow with their monetary policy decision. Widely expected to hold rates steady, but we also have that summary of economic projections, right? So what we're looking at here is what markets are pricing for the full year. The most favored outcome from markets would be 2 interest rate cuts. And so that dot plot indicating there's 2 cuts. You can also see a fair amount of investors pricing in a chance of 1 cut and a fair amount of investors pricing in a chance of 3 cuts. I think that perhaps gives you an idea of where maybe some of the risks lie. Not a lot of people think the Fed won't cut this year. So that would be interesting if that's kind of one of the key takeaways from the press conference. But this is where we sit headed into that decision.
I saw the economist and strategist David Rosenberg telling his clients this morning, in his opinion, the Fed should ditch the dots. Ditch them, because his point was, Rosenberg saying, in his opinion, basically meaningless. Against, in the kind of uncertain backdrop we find.
No, it's a fair point, right? And we've seen markets sort of look past some Powell commentary throughout this tariff back and forth, right? If he comes out tomorrow and he's talking about data saying they need to wait, and you have July 9th coming up with this big 90-day tariff pause deadline, maybe market does just shrug its shoulders, right, for 2 weeks and says, you know what? Thanks for coming out today, Chair Powell, but we're curious about what Trump has to say in the next 2 weeks about tariffs.
All right, we shall see. Thank you, Joshua. Nissan revealing its new 2026 Leaf EV, a big update to one of the original mainstream EVs in the U.S. For more, we're bringing in Yahoo Finance senior autos reporter, Pras Morini. Pras.
Yeah, you know, you showed some of the pictures there. I think I was surprised when I first saw the images how good looking the new Leaf was. You know, back in the day it was very bulbous and swoopy and round and kind of looked like a boring EV. Now they kind of added a bit more zazz to it, I guess, pizzazz. It's like a little mini Aria, the other EV, but it's going to target some front-wheel drive car, 300 miles of range, probably in the 30s, pretty good value proposition. And Nissan told me they want to attract 70% conquest buyers, and most of those are going to be Tesla buyers, right? So can they do it? That's the big question. And Nissan is putting this vehicle out, competitive vehicle, but the company itself is sort of in, I don't want to say dire straits, but they lost a lot of money this year. They're going to be cutting a lot of jobs. They kind of reformat the portfolio because it's a really tough automotive.
How much is it going to cost me if I'm interested in this? What are they charging?
It's good. They haven't put out official pricing, but an executive told me it'll be starting in the low 30s and go all the way up to possibly low 40s based on trim level, things like that. But it's a competitive car, I think, and it looks good.
All right, let me ask you about another headline in your world today. I want to talk about this new Corvette, because here's what Car and Driver says. Ready, Praz? Mm-hmm. The most over-the-top model to ever be sold from the factory. Give me the specs on this.
I mean, this is the ZR1X. So the ZR1 already came out. 1,100 horsepower, so V8 car, right? The most powerful V8 ever. This
0 to 16 under 2 seconds.
This one adds a electric motor, so now you're going to go above 1,200 horsepower, right? Because you had an electric motor that powers the front wheels. You have the honking V8 in the back, flat plane crank. It sounds like a freaking race car. Sorry, it sounds like a race car. I mean, it is the ultimate Corvette, and they want to take on Ferrari. They want to take on cars like the Lamborghini Revuelto, Ferrari's SF90, which are hybrid supercars.
No lines on that car.
I mean, look, you're going to get the best of both worlds. The best electric power in the front to kind of give you better like torque factor in the front, but then you still have the insane gas-powered engine that people still want. People still want these things. They don't want pure EVs for their high-performance, ultra hypercars. They want this. I should say hypercar because this car is going to come in a lot less cheaper, a lot cheaper than a Ferrari will.
You sold me. I'm in.
We're in.
Yeah.
Sign me up. Sign us up.
Just very quickly, how important is that Corvette family to GM?
So I think this is a good question. We joke around about Corvette, but like this is a huge brand for GM. There's thoughts that they might even make a Corvette brand that would be sub brand outside of Chevrolet because that's so popular and how long that name has been around the automotive world. And Corvette is the pinnacle, the halo car for Chevy and GM, and you're seeing it there. That's what GM can do if they put their minds to it, right? That car is going to be insane, and it's already, I believe, lapping these test tracks, beating all kinds of records.
All right, when you get the chance to test drive, take me with you. That's all I ask.
We'll do.
Thank you, Praz. Thank you. From LeBron James and Tom Brady to Travis Scott, Kevin Hart, 2025 Fanatics Fest kicks off this Friday, set to bring different leagues, athletes, and fans together for a weekend of sports culture. For more on the incredible growth of this event, let's welcome in now Lance Fensterman, Fanatics CEO of Fanatics Events. Lance, it is good to see you. So maybe start high level, Lance. For the uninitiated, talk us through this event, how it came about, and what sort of just the point and purpose of it is, Lance.
Totally. So if you think about most sort of big industries, whether it's consumer electronics for the CES show, or it's popular culture, has Comic-Con, or Coachella for music and influencers, there's some big, giant platform that brings the entire industry together. And that doesn't exist for sports, or it didn't anyways, until last year. So the man I work for, Michael Rubin, visionary guy, amazing entrepreneur, asked a simple question. Why is there not a single huge event platform that brings all of sports, collecting and memorabilia, culture, entertainment together in one place? So last year we said, let's try. And we pulled it off with about 80,000 people and a massive immersive sports, entertainment, and popular culture festival. We're running it back this year. And we're going to open up in a few days and welcome in over 100,000 people. We're going to double in size. It's going to be pretty massive.
Over 100,000. That is incredible, Lance. So if I attend this event, walk me through, what am I going to see? What am I going to experience?
Totally. So for starters, we were just talking about EVs before I joined, and we've got an awesome Ferrari over there that we're giving away as second place prize because we're doing something called the Fanatics Games, where we take 50 athletes and influencers and they compete against 50 lucky fans in 8 competitions all over the show floor, encompassing every single sport. The winner wins $1 million. Second place, a beautiful Ferrari hybrid, which I didn't know they made until I got to drive it yesterday. But really, that's what brings everything together, because this show is all about immersive league experiences. So 40-yard dash for the NFL. Dick's Sporting Goods has a massive, massive space where you can play basketball. You can use a simulator to hit drivers. NHL has a slap shot experience. WWE, you can walk out to your favorite superstar music and do all of the actions as you go. Every single sport, FIFA, EPL, MLS, they're all here, all with immersive experiences. Beyond that, there are dealers that are selling collectible cards and memorabilia. We've got a museum of memorabilia that has $250 million worth of sports memorabilia. in it. There's main stage panels where you can see amazing speakers like LeBron James doing panels and talks. There's podcasts that are going to be reporting live over 4 different stages. It's just going to be a really, really fun experience if you're a sports fan or a fan of sports culture or a collector.
You mentioned LeBron James, Lance. Who are some of the other athletes I would see if I'm coming to the event this weekend?
Yeah, well, Jeter will be there. I'm in New York, so I think I'm obligated to point out that Derek Jeter, along with about 8 other Yankee champions, will be on hand. Tom Brady, of course, but a whole bunch of current NFL players that we're pretty excited about, from Joe Burrow to C.J. Stroud to Caleb Williams to the greatest receiver in the NFL today, says the Vikings fan, Justin Jefferson. Just an unbelievable array of baseball players and hockey players and professional football players and international soccer and WWE superstars and UFC fighters. It's a really pretty rich environment of athletes and celebrities.
And if I want to attend, Lance, how much does it cost?
It's about $50, $50-$60 for a day, a little discount if you want to come for all 3 days. It's Friday, Saturday, Sunday. But truly, like, if you're a hardcore fan, wonderful. If you're a hardcore collector, wonderful. But there actually is a lot for you if you just love culture and entertainment and sport, and where they all mash up. And increasingly, they do more and more.
100,000 expected. Incredible. Lance, thank you so much for your time today. Appreciate it.
My pleasure. See you soon.
U.S. retail sales coming in lower than expected today. We're taking a closer look under the hood of the report, particularly at food. Yahoo Finance's Julie Hyman joining me now with a closer look in our chart of the day.
Well, investors and economists watch these retail sales numbers closely, of course, because they provide a barometer, a window into consumer spending. But there's something more specific that Tom Simons, the chief U.S. economist over at Jefferies, watches, and that's the relationship between grocery store shopping, or food at home, as many economists call it, and buying in restaurants. And the trend that we have seen since the pandemic in particular is that grocery store sales have sort of flattened out, and we continue to see restaurants trend higher. He said if consumers were worried, right, they would be trading down. They would be trying to save money by eating more at home and spending more at grocery stores and not going out as much. And even though last month we saw both of those numbers tick down very slightly, the longer-term relationship, he says, does remain intact, and suggests that when coupled with things like open table reservation data, shows that consumers are still willing to spend. On the flip side, we also talked to Chris Hodge. He's the chief U.S. economist over at Natixis CIB Americas, and he said, yes, we have seen that, but he noted that there has been something of a flattening in overall discretionary categories. So he looks at restaurants, but he also couples it with what he considers to also be discretionary, things like sporting goods, for example. And there he sees a little bit more of a flattening. So as always, there's a lot of data to look at and a lot of ways to interpret it. At least for Tom Simons of Jefferies, this chart gives him some reason for optimism, Josh.
All right. Thank you, Julie. And that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.